Hey guys, just about on my way out the door here. I thought I'd do a quick little video, kind of done for the weekend, but I wanted to get in touch with you guys about a couple of things. First thing is I want to talk a little bit about the blog and the comments that have been posted on a bunch of different topics, but most recently, the most recent ones especially, I really appreciate them. And the great thing about the comments is that everybody can read those, and hopefully everybody's taking the time. Don't just watch my video, but actually read the comments, because there's some really great thoughts and experiences that guys have, in this case with Novacode, that guys have had and have some insight on. So that's great. Hopefully, again, read the comments, because the guys who are posting are doing a bang up job, and I really appreciate that, and that's working out well for everyone. And secondly, I see the chart up here. We're going to go through, talk a little bit about the 110 EMA trade, a little bit more, because I had some questions via email, so I thought I'd share those with everybody. So first off, the blog, or the comments, fantastic. Chris, who talked about the refund policy being an Italian prison. Well, I shouldn't laugh, but it was clever anyway. So hopefully that's not the case for you, Chris, if you did buy it, and for anybody else out there who did. Um, I hope it all works out. But again, Chris, thanks for posting. John, thanks for posting as well. I appreciate that, and thanks for keeping it shorter. Just kidding. Um, who else? Who else? Who else? Panagoitis. I hope I didn't butcher that name too bad. I was happy to post what you took the time to write, because it's all true. Everything you wrote there is true and spot on, and I got nothing to hide there. You're absolutely right in everything you said. I'm not to be lumped in with one of those guys. I haven't charged anything. I haven't asked for a nickel for anything I've given away, and I don't expect I will. Who else? Who else? Graham, that was it. Yeah, Graham had a great post, and he's talking about how the dubbing mistakes, because they said it was a live webinar, and I watched a little bit of it, and it wasn't live, because they weren't using GoToMeeting, or GoToMeeting's a big one. Who else? Who else? Anyways, those webinar kind of sites, those meeting sites, and or not sites but programs, and they weren't using that. And I actually grabbed their where is it? I grabbed the source code from the website, which anybody can do. Right click, view source, and there it is. And you can scroll through it, and if you kind of know what you're looking for, you can see that it shows. It says the string at the end is player.swf, which is just a video file. So it wasn't live at all. It was so not live. So and that proves the point. And as Graham mentioned, the dubbing between the one guy talking and the other guy talking was terrible. It was awful. So if they're saying it's live and pretending it's live, it's greasy. Like, it's just, how much can you trust them if that's what they're claiming? So so be it. Anyways, but again, thanks guys for posting, and that's very cool stuff. So that's it. So make sure if you have something to say it on the blog, and it helps everybody. Now, as far as the 110 EMA goes, I've gotten quite a few emails about it, and the major question was, does it work on other time frames? And absolutely it does. It's absolutely it does. It's not just a range bar. In fact, it probably doesn't work as well on the range bar, because of the fact that the bars or the candles are always the same size, whereas with a 15-minute chart, 5-minute, 10-minute, hourly, weekly, 30-minute, whatever, the bars will fluctuate in size based on what the price is doing. So having a look at this 4-hour chart on the euro yen, so again, we see that longer candles, obviously, and I wanted to bring this to people's attention, that when price comes to the 110, you don't have to take a trade. Like, there's not a long or a short guaranteed. There are times when I don't. I just say, well, I don't like this because, and I'll show you a couple of those. I don't like this trade because this long wick. Now, the example I gave um, on the video, it showed, you know, it was a longer wick, or pardon me, a longer candle, and it busted right through. But it wasn't, you know, abnormally large. It was larger than the previous candles, but it wasn't like this big. Like this is, you know, this is crazy big. This is twice, at least twice as big as ever. Twice, like it's 5 times that size, that size, that size. So it's too exaggerated. Now, if let's say this candle here, if that, let me just draw a little line here. If this candle here, let me change the color of that. Sorry, trend lines. Call that maybe blue or dark blue. There. So if this candle here broke through, I'd be interested. But because this one was so huge, I'm not taking a trade. Even though that's, you know, part of the plan is when you see the price come up to the 110 and then break through with conviction like it did here. It was too much. You know, it was way above it and then it closed way below it. Huge, huge, huge. But if it was a smaller candle in relation, you know, to what, you know, kind of normal price moves for this pair during this time frame, then yeah, I'm interested. So this one I wouldn't have taken the trade. Now that's obviously the hindsight looks perfect, but that was just an example I wanted to give. And same with this one. Like this is, you know, even though you would have, if you would have got in on the next bar, you could have got, just on that candle, you could have got, you know, 40 pips with like zero pain. But again, that's just, it's way too huge, way too huge of a bar to, and even though it breaks through, it's just too exaggerated. You know, that could have whipped back just as easy, and that's kind of what happened here. You know, it breaks through and then just goes back up. So, you know, those ones I stay away from. Now this one, this is March 24th, March 23rd, 24th. This is more, you know, this is more what I want to see and how it reacts. Now with this bar here, this one didn't touch actually. We'll prove that. It's the low was 838 and 825 is the actual 110. So missed it by about a pip. So when this one touches, breaks through, comes down, and then comes back up. Now ideally, in a perfect world, it would have closed above, back above, but it was fairly close. So I would have liked this trade, and more to the point, if I did get in here on the open of this next bar, I had reasonable amount of risk, or at least for me, and I think most people. 27 pips. Okay, you can, you know, scale down your size. You know, trade half a lot or a quarter of a lot or whatever, you know, whatever your account kind of dictates. So, and this is on a 4-hour time frame, so you're going to be looking for larger swings anyways, a larger move. You're not taking 10 pips out of a 4-hour chart typically. So if I can risk 27, I can at least make 27. Heavens, and that's, you know, that was easy. And then if you hung on, you could have made, you know, 5 times that. Okay, so that's, or more if you just kept hanging on. But I like this one because it gives me a decent downside. That's the first thing I look for, is what's my downside, not how much I can make. Those take care of themselves. I have to look at the downside.